Greetings, this is Dr. Jeffrey Scott, and this is my weekend market update. Excuse me, for January 19th, 2025. Spent last week in San Francisco at the JP Morgan Healthcare Conference, and I could say it didn't disappoint. If you had any ITCI, you know what I'm talking about, where we did see some M&A activity, which we usually see at that event. San Francisco actually seemed a little bit better than it was a year ago, a little bit more action and less boarded up windows, but still a far cry from where it was 10 years ago. Interesting markets. I'm going to do this a little different. I'm going to probably use a little bit more than the single platform as I go through and look at charts and look at the state of the market. And there's some things I like in TradeStation that I don't have in other programs that I'm going to actually show you, frankly, right off the bat. So I titled this from oversold to overbought already with a question mark because I'm going to show you evidence that it is. Do we go higher? Is the SPY leading the way, breaking out above resistance? Or will the other three, the diamonds, the Qs, and the Russell, fail and take us lower? It's an interesting time. Again, my name is Jeffrey Scott, and my email address is hgsidoc@gmail.com. As always, this is for educational purposes only. Anything I talk about should be considered education, and we take it in the spirit of education, not investment advice. The intent of the video is always to demonstrate the tools of top-down analysis and how I apply them. Trading involves risk. You are solely responsible for any investment decisions you make. I may own or intend to sell any stock I mention in this report. Trading stocks and options should be considered risky, and you should always consult with your financial advisors before making trades. As you'll see, I have tools in multiple platforms. Wealth charts with their great scanner and the great tools and additional educator stuff put in by Rob Hoffman's pretty top-notch. TradeStation, a broker program, TradingView, soon to be a Metastock, and then soon to be the Market MRI Pro app, which is my own with Praveen. If you like these types of videos, you want them more frequently, there's a couple things you can do. One, you can join stocksanddocs.com, where I try to put a video up every morning when I'm not traveling. The other option is to join my Google group. I don't otherwise keep a mailing list, and this is the way I communicate with people when I have things to tell them, thoughts on the market. I pretty much put out a video most nights when I'm not traveling. All you got to do is go to Google Groups, search for Top Down Trader, sign up. It's free. It's not about solicitation. It's really about showing you how I use the tools and how I look at the markets. Speaking of how I look at the markets, and I gave the Top Down group 24 hours to front run registrations, but I'm going to do a live event a week from Saturday, so January 25th, 9 a.m. Eastern Time. This is no cost. You don't have to own my tools. It's about how I approach the markets from a top-down perspective. It's a chance to sort of relate many of the things I learned from Ian Woodward and others over the years. Why top-down? What tools can you use? How to identify high-value trading opportunities? And if time allows, how I trade them. We'll look at multiple tool sets, and we'll talk about the new Market MRI app, which I'm so excited to bring to the market. I'll try and remember to put the link in the remarks section. It's open to all as long as seats are available. It's tinyurl.com/topdowntrader to sign up. So major markets always tell the story. And when we look here, we could see that, and I'm going to look at whether I look at the left or the right, you could see that 5-day performance in the major markets was pretty phenomenal. Beyond pretty phenomenal. It was incredible. You could see the Russell up 4%, the Dow 3.7, NASDAQ 2.9, S&P 2.9, and the NASDAQ Composite 2.6. It was a very strong week in the market. After a frankly weak, I hate saying that twice, and after what was a sell-off Friday, the 10th. So let's show you the indexes before we even go further, because I think this is pretty interesting. On my charts, ignore the green and the blue moving averages for now. But what I would focus on is the yellow, which is the 50, the red, which is the 200, and then these straight lines are automated trend line support, which is part of Sagar Nandi's SuperiorProfit.co Q Elite tool set. Notice we had trendline resistance on the spider, which we broke through on Friday. And we did that coming out of a squeeze with momentum and a breakout. Well, that's pretty bullish looking. Then we look at the Qs. We actually gapped up. We had great volume. We had breakouts and momentum signals. And we failed right in these lines of resistance. Can we get through those? I think that's going to be very important to see. If this was a stock, I'd be waiting to break above that before I bought it. If we look at the diamonds, struggling at the 50. And if we look at the Russell, they've been stuck between the 50 and the 200. So yeah, the spiders look great. And the spiders tell me that maybe this market's going higher. But I say that recognizing that the other three have not broken out yet. If we look at the volatility, I think I got the VIX over here. You could see volatility, and let's just put this on a weekly chart, which will take everything to a weekly chart, which is okay. You could see for the week, volatility didn't do much. It was relatively flat if we look at the VIX. And if we go back here and we take a look at the UVXY, and I put that one on a weekly, well, you can just see here it didn't do much, 0.24 on the weekend, or 1.5 or 1.2%. So not much of a move. Now, remember I've talked about the dollar, and I've been very confused about this. Let me show you backup. Here is the dollar futures. Where's the breakdown? You don't see it. In fact, if you're bullish the dollar, you're pulling right back towards support. And part of why this market was up, I believe, this week was because the dollar was doing poorly. But Friday, the dollar moved up. And that's something that I'll be watching because a strong dollar is probably not going to be great for my equity portfolio. The dollar was up 0.4%. You look at the UUP, I think right around the first of the year, there was some type of rebalancing. But the UUP and the Dow futures are different instruments, and you could see they've got a different pattern where typically they have similar. You could see on the UUP up 0.37. And when I looked at the commodities, we have had breakouts here. Although gold was down a bit on Friday, it's broken out above the 50. We look at silver, broke out above the 50, staying above the trend line even though it came back in. Oil consolidating after a pretty big move. Natural gas pulled back after breaking out above the 200, which have been resistance. And then if we look at, let's just switch these to the week. You could see on the week the 10-year and the 30-year both had red candles and were down on the week. All right, back to the daily. So let's go back to the PowerPoint. The Q Edge tool gives me a sense of where the market is from a breadth perspective. And I love this tool. You've been using it for years. It updates intraday. It's based upon the S&P 1500. Now, for the most part, that's probably the right thing to do. Sometimes I suffer from analysis paralysis. Not really the paralysis, but I had too much analysis. If you think about the S&P 1500, you got the 500 large caps, the 400 mid caps, and the 600 small. What we see here is that on Friday, 100% of the sectors were up, 67% of the industry groups were up, and 64% of the stocks were up. So that's a pretty bullish day. You could see here 71% of the stocks are above their midline, their Bollinger Bands. This is a little concerning. This is the evidence or part of it of an overbought market where, as you could see, in the S&P 1500, 23% of the stocks are above their Bollinger Bands. Now, what's interesting is a week ago, this was almost red everywhere. But we had such a strong week that if you look at 5 days, all the sectors were up. Industries 92%, stocks 87%, and was strong enough to bring us up 2 weeks, although over the month, more of a mixed market. This is the Q Market Breadth tool, and this takes into the NASDAQ plus the NYSE. Now it's missing some instruments, so I'm not sure what to make of some of the breadth indicators up here as the data feed from Metastock is being revised. But you can see we did have on Wednesday, we had some accumulation bars. But what I wanted to point out is this 13-week new high, new low, which is one of my favorite short-term measurements of overbought and oversold, is approaching overbought. When you look at the NASDAQ here and the NYSE on the right, you could see the NYSE is really the one becoming overbought. The NASDAQ still has some room to go. If we look here at the Dow Jones, overbought. Russell, not yet. Approaching on the NASDAQ 100, approaching on the S&P 1500, and approaching on the S&P 500. So a little bit to be concerned about as the markets do seem to be approaching an overbought state. Now, markets can get more overbought. Markets can get overbought, go sideways for 3 days, and continue the rally. So just because I'm seeing them become more and more overbought does not mean the rally's over. Now this is concerning. This is my timing model for weekly. It involves this yellow line, which is a 30-period WMA. It involves my bongo weekly. To get a buy signal, I have to cross above the WMA and have the bongo go blue. We went to a buy signal in the first week of November in 2023. And we stayed in a buy signal for quite some time. We have come out of that buy signal on the weekly spiders. We are now in a sell. On the Qs, up here, you can see we're still above the WMA, although the bongo's red, and we are still in a buy signal. The Russell, we've been in a sell, as have the diamonds. So even though both the Russell and the diamond have crossed above the WMA, until they flip their bongos, it doesn't count. So you want to be bearish, 3 out of 4 of these say sell. You want to be bullish, the daily has already bounced. In fact, on the daily, we are now in a new buy territory in all 4. Now the daily leads the weekly. And if you think about in a downtrend, you would expect the daily, this is a downtrend, okay? And you might see the daily turn positive in some of these uptrends, even though you're still in a downtrend. But I'm not ignoring the fact that each of the dailies turn bullish. The weeklies can't turn bullish until the dailies turn bullish. So is this a retracement bullish signal in the setting of a bigger sell-off, or might it be the beginning of something new and a new bull run? Remains to be seen. But you could see even on the daily that the spider and the Russell and the diamonds are really approaching that overbought area on the 13-week or 3-month new high, new low. What about performance of the various sectors? If we look at Friday, we look at one-day close on the markets, 1.69 on the Qs, 1% on the spiders. The VIX was up 0.78. Diamonds up 0.73, the Russell's up 0.41. They were all up. I guess the disappointing thing is the VIX closed at the high of the session, and the diamonds and the Russell gave up some of their earlier gains. If we look at new highs and new lows at the various time frames for the NYSE and the NASDAQ, they're positive. That's good. If we look at the sectors, we could see that looking at the S&P 500. Now, what we showed you in the Q Edge tool looks at the 1500. In the 500, we did have some one-day change negative, and that was in healthcare. We also were negative over 1 day in real estate. We were led on Friday by financials, energy, and materials. Now that's interesting because over a longer period of time, those have been laggards. And if we look at what themes were leading on Friday, you can see cannabis, China, uh, transformational data sharing, China, uranium, semis, commerce, lithium. Interesting to see a lot of China there, considering all the tariff discussions in Washington. Maybe it's not all going to happen. Here are my buckets, my breakout of sectors, industry, percent advances, and above the midline. But rather than just stick with the S&P 1500 as done by Cigar, I'm looking at the S&P 1500, the NASDAQ, and the NYSE. And you could see blue would be Friday, gray would be Thursday. And you could see a pretty bullish day everywhere where all of them were, most of the sectors were up, most of the industry groups were up, although only 59% on the NASDAQ, the NYSE. And then you can look down here and see 58% of the NASDAQ was up, 59% of the NYSE, and 64% of the S&P 1500. If we want to look at 5 days, you can look over here and see that Russell actually led 3.96, Diamonds 3.67, Spider 2.94, and Q's 2.87. That would certainly count as a very, very bullish week. And again, on the week, industrials, real estate, utilities, all above 4%. And the big movers again were transformational data sharing, I think that's blockchain, home construction. That's interesting because who would have thought that with rates still high, although they did come down on the week, that home construction would be up at the top, and then we have more China infrastructure development and more China. Rates did come down. It's hard to tell which is which, but yellow is the spiders. It went up on the week, and rates did flip around. And you could see on the week down 3.5% on the 10-year and down 2.4% on the 30-year. Is there a recession in our near future? I think that's great for the pundits on TV to talk about. I care about data, and I could say there's not one right now. Will the tariffs put us there? A lot of people say it might. I think the concern is if you look at the 10 minus 3 months or the 10 minus 2-year Treasury, you could see that every time we've crossed below the zero line, going back to the 80s, and then we cross back above, we follow with a gray bar. And that gray bar represents a recession. Each time we got a recession, we've crossed back above. If we look over here on the right, similar story, we've crossed back above. Now those recessions lag the data on the crossover. So it's still very possible that we do have a recession. And I'm not saying we're not going to have one. I just don't feel that it's around the corner. Partly why I look at the Philadelphia Diffusion Index general activity. Recessions start when we cross below minus 20, each of the recessions, and we're at positive 44. So perhaps there's too much market activity right now to say that we have a recession. And oh, by the way, I put this in here twice. I was going to show you the ICE Bank of America credit spread, which shows whether or not we have any credit tightness, and we don't. So this is a duplicate. Now, this here's the granddaddy of my 13-week new high, new lows. This is in TC2000, Warden. And you could see if I was to spread this out, whoops, I can't do that in that picture. When we get down to the white bar, markets bounce. And when we get up to this white bar, markets drop. And what are we doing? We're approaching the top on the white bar. We're not there yet. We could certainly go several more days before we pause. If you look at stocks above the 200-day, stocks above the 40-day moving average, both improved on the week, but not at extreme. So it's really that very short-term overbought signal on the 2121. Here's those buckets again, and you can see over 20% are above they're Bollinger Bands. If you think about the Bollinger Bands are designed to capture 90% of a stock's movement. When 20% plus of the stock market is trading, of the S&P 1500 is trading outside that Bollinger Band, it might make you think that the markets are going to revert to the mean. So that's the only, well, not the only, but that's one of the negatives that I have here. Now we can actually look across the various markets, and you could see that really shifted to the right this week, and that the ones with the most stocks above are the NYSE and the S&P 1500. The Russell 2000 and NASDAQ do not. Now, my calculation on the S&P 1500 and Market MRI Pro is a little bit lower, and so I'll ask Praveen to validate our math. I think sometimes you'll see it change at the end of the day, and that might be because we're looking at percent B movement within the Bollinger Bands. And if we reset every day, the Bollinger Bands change their size. So maybe there's a story there. But I'll ask Praveen to go ahead and review that. Praveen being my programmer extraordinaire. We have not seen a Hindi on the NASDAQ since December, and on the NYSE as well. And what I pointed out last week was it was time to start watching the new lows and the new highs. At least on the NYSE, we're starting to make new highs without many new lows. On the NASDAQ, on the other hand, we are making new highs, but those new lows have been pretty pesky. Strong week across the market. If you take all the stocks in the U.S. market, filter them for $2.50 and 250,000 shares, assign an ERG to them. ERG is EPS rank plus relative strength rank plus group rank. The most you can have is 297. And at the top, we're looking at performance to ERG. You could see, and we take these out because there's so few stocks. I take this out because there's so few stocks. For the most part, it looks pretty flat, but a very big number. If you look at here, stocks that did not make any earnings actually outperformed those with good EPS ranks. High relative strength stocks underperformed low relative strength stocks. So when I see that, I know that D and E are going to be stronger, which tells me stocks that were out of favor the prior week were rotating in. So there was clearly some rotation. How do I know it was a good week for growth? Because if you put the S&P 500 in orange, you put, and I'm a growth stock investor, my different lists are in blue, and you could see, including my holdings, were up over 3%. And in yellow is the Investors Business Daily lists, also very strong on the week. And you could see there's a lot more black than red. So a very strong week, and growth was in favor. In fact, I don't have it here. You could see MAGs were up 1.9, ARC Innovation was up 3.7, semis were up 5.7. It was a good week for growth. Innovator IBD 50 ETF was up 3.6, so a great week for growth. Not a good week, really a great week. Now what about this coming week? Boy, do we have a lot of currents. I showed you the breakout of the spider, but not yet on the others. We have no market trading on Monday, woohoo, kind of a day off, no news on Tuesday. We also got that inauguration on Monday, so that's going to be interesting for sure. If you look up here, you can see Wednesday leading economics, Thursday some jobless claims, and Friday some home sales and some PMIs. But what we have that's exciting, and maybe the big event for Tuesday, is Netflix earnings. We got big week of earnings. So I used to call this coming week earnings Lollapalooza. Netflix is one that usually outperforms, but not always in this quarter. And I think that may be a bellwether of what to expect for tech earnings. So good week for stocks, best week since the election. Better than expected inflation data and positive earnings surprises drove the rally as the week progressed. News flow supported the markets. Israel-Hamas ceasefire, if that holds, and a hostage exchange, which should be good for everybody. All over the place on tariffs, and some talk about wanting lower taxes. That's pretty exciting. We did see rotation, as I mentioned, with some of the laggards, financials Energy and materials all gains over 6%. Small caps outperform large caps. Equal weights outperform market caps. So we're at an interesting junction. Weekly timing model deteriorated. The daily timing model improved, suggesting some short-term strength. 13-week timing model suggests we're overbought in the short term. And the buckets have also moved to an overbought in the short term. So if you ask me what I think is going to happen, I think the markets are going to go higher this week. However, after the outside gains of last week, it would not surprise me to see us pause or perhaps even pull back a bit. However, from a bottoms-up perspective, I was wowed. I wouldn't even say impressed. I was wowed by the number of great setups. Perhaps this is enthusiasm around regime change with the Monday holiday for the inauguration. And I always remember that overbought markets can become more overbought. Again, against that view is the fact that 3 of the 4 majors are sitting below resistance and have not yet broken through. So it could be an interesting week. Again, online event. I really love doing these programs, and I don't really care if you've bought my programs or not. As I mentioned, I like paying homage to those who I learned so much from. That's a way of talking about what they taught me. If you like my tools, that's great. There'll be probably some offers on my tools, as I usually do at the live events. But this is going to be 90% education and 10% talking about things you can buy. Again, absolutely no requirement to buy anything. tinyurl.com, top-down trader. Let's go to the charts. Now that took longer than it normally does, and it's simple reason why is because I really wanted to talk about these charts here. So what I'm going to do is just look at the week that we had, and I like looking at the 5-minute charts on Wealth Charts. It's pretty easy for me to see and to talk about. This was Friday the prior week, the 10th. Gap down, I think we had some bad inflation data. And then what happened this week? We gapped out on Monday, closed higher than the gap. Tuesday, a little bit loosey-goosey, closing relatively flat. Wednesday, big gap up. And then Wednesday and Thursday, pretty much sideways movement after that big gap up. And then Friday, we gapped up again. So a strong week when you consider the prior week closed at this red line. So woohoo, a good week in the U.S. markets. If I look at the various other ETFs, you can see they pretty much all behaved together. Just for the sake of discussion, that is the Dow sort of mapping the S&P. That is the Qs mapping the S&P. That is the mid caps. That's the Russell, which lagged a bit. And there's the S&P. Just looking now at the major indexes very quickly, and then we'll move on. Let's just look at the weekly charts. The Spider weekly chart, yes, it's rolled over. It is 1, 2, 3, 4, 5, 6 weeks off its all-time highs. It had a massive week up 2.94, bullish engulfing for the most part on decent volume. So does that look like the bottom is in? Certainly could be, holding well above the 50-week moving average. The weekly Qs, similar pattern, up 2.87%. Now this one, I don't have a higher high. That bothers me. On the weekly spiders, I'm not sure I had a higher high either. It looks like they're pretty close. So I have a lower low, not a higher high, so it's a nice candle, but it's not trend reversal. And on the weekly Qs, I think I can say the same thing. It's a nice candle, looks great, but in itself is not a trend reversal. Could be the beginning. I'm a believer. Rah-rah markets. This one, different. This is the diamonds. Higher high and probably a lower low, but at least we got that higher high in, up 3.67%. And then the Russell pulled all the way back to their 50 weekly and bounced. And again, not a higher high, but a strong weekly move, almost 4%. So you want to be bullish. I think there's some reason to be bullish. I'd like us to clear that resistance. In short term, I'm a little bit worried. Just curious what the VIX Weekly showed here. And the VIX Weekly showed it was, oh, that's interesting. Except, yeah, that's the right way. Showing minus 18.27 on the VIX Weekly. And you can see the dollar, we talked about it already. So we've already looked at commodities. We've looked at the timing model. Let's look at the ratio charts. So I like to look at ratio charts to give me a sense of what's working now. So in wealth charts, you can create a ratio chart, pretty simple. And the things that are going up are stronger than the things that are going down. The long line says it's a nice move going on. And what do we see? Materials bounced off the bottom. They actually won the leaders this week. Communications have come down. Energy, big move off the bottom. Financials, a big move. Industrials, a nice move as well. Technology is clearly weakened. Staples are not working. Real estate, not so much. Utilities picked up a bit, I guess with the rates coming down. Discretionary has been leading the market, pulled off a bit, and healthcare can't catch a break, and biotech even worse. So where's the strength? Energy, financials, industrials, and maybe even materials. Now you can do that on daily. I do it on a 1 hour chart looking for short-term movement. Now, a lot of people have commented they like me to look at the major stocks. Let's just go to the heat map, and we're going to look at the mags. Apple, big sell-off here on Thursday, broke the 50. I think we're probably at a point where we can start extending this thing down. Wouldn't be owning it as long as it's below the 50 and below that line. So we were down Thursday 4% and Friday up 0.75. An inside bar, that could certainly be a continuation day. Nvidia, this one just doesn't want to die. It gave us a false breakout here, and I thought that may have taken us down to the 200. Late in the day Friday, it may have been even after market close, there were comments that the recent U.S.-China chip blocking laws will not impact on Nvidia. That could be enough to propel it higher. As it was, it finished up 3% after a pretty weak Thursday, down almost 2. Tesla pullback, didn't quite make it to the 50 and broke out above the 17. It looks good. Meta kind of consolidating close to new highs. Google consolidating close to new highs. Netflix, this one is broken down by the 50, and this is one that whatever is your favorite seasonality program, this is one that does good seasonality. So I'm going to go to one of the oldies. So I'm going to pause it for a second and pull up one of the oldies. Actually, I could probably do it right here. Let's see. This is an old program. It was a remnant from, oh, I hope I haven't set this up yet. A remnant from Magenta Trader when Magenta Trader had some issues between the proprietor and the programmer. And it has been my go-to. Let me see if I have updates here. Probably, oh, perfect. So let me just do a couple things. Let's open up the windows for data, and let's put in Netflix. And what this is going to give me is a prediction of what the short-term earnings are. And I want to show you this because we are in a period of, let's see, that's Navigator data. We are at a period that Netflix does well. Now, if you look at from January 17th, which would have been Friday, to March 3rd, it's up 7 out of 10 years. But it's really this move right here that is so positive. The move between right before earnings for the next week or so. So I am a Netflix seasonality trader. Not saying it's going to go up this year, but this is has been over my career one of the best times to buy Netflix. So be interesting to see what happens. Um, Certainly, because I'm talking about it does not mean it's going up. Amazon, Amazon looks pretty good to me here. Again, sort of flagging here after a run up, holding above the 50. Mr. Softy broke above the 50. Has been very loosey-goosey all over the place. Um, and then I guess I'll stop here. Maybe we'll just look at Lilly. I'm trying to figure out why Lilly's going down so much. Um, I think Lilly's challenge is Norvo, and the reason for that is Medicaid and Medicare, Center of Medicaid, Medicare, CMS is starting to do some price controlling on drugs. It's called the IRA, Inflation Reduction Act for drugs, and it is starting to make a difference. Now, Mounjaro was not mentioned in the 15 to be addressed this coming year, but Ozempic and Wegovy were. If those drugs have price controls at 50, 60% put on them, it's not going to be good for Lilly. And I think, just guessing, that might be part of why Lilly is showing some weakness. They're great drugs. It's just, I'm not sure we can afford them as a country. Wealth Scanner. So Wealth Scanner is going to show us a list of ETFs and what's leading. So Yahoo, we got two things above 800. They're dividend payers typically. They are MLPs. They're part of the energy complex. Think about people paying a tax to use the pipelines is one way I think of it, and one that we've talked about many, many, many times is the one that I hold. Why? Because I tell you that I hold it because these things are just steady eddies, and it's not this that I own it for. It's because it has a dividend 7 or 8%. But the MLPs are strong: oil production, oil services, gold, gold miners, and now we're down to the 600s. So really the only thing that looks interesting here is energy. Now, at this point, whatever program I'm using, I'm going to look at the tools and try and figure out what is interesting and compelling from a potential purchase perspective. So I'm just going to show you just a little glimpse of what we're going to look at this coming Saturday. Let's start with Wealth Scanner. And I thank Rob Hoffman. He put this scanner in for me. I look at, we'll just call them 4 dots. And you can look at them right here. And I see it. Let me just change one thing here. I've been trading a long time. And as I watch the markets, I'm a simple guy, so I don't have fancy names for this stuff. I notice that certain things happen when markets take off. What happens? One, you might see a gap up. Okay, so the top dot here is a specific type of a gap. You might see big volume. Morales and Katcher called it pocket pivots or pocket pivot volume. That's the second dot from the top. You might see a breakout from congestion. All right, and that is the third dot from the top. And you might be seeing a stock with momentum, which is the fourth dot. I haven't seen many big moves that were not preceded by dots. Then here we have the squeeze, and typically in all my programs it'll be yellow. And then I like to find stocks that are breaking out from the squeeze, so I'll color those 3 green here, which means the squeeze is over, and try and find things that are moving. The squeeze is building up compression and energy, and when you come out of the squeeze, you take off. But you could go up or down. So that's only telling me I've come out. Now, one of the things I like about wealth charts a lot is that earnings are built in. And I could see that ET actually missed on their earnings. Now, doubled from the prior period of time, and you could see even with the earnings miss, they have done very, very well. And again, they paid dividends in the 6 to 8% range. So since we said that energy looked good, one thing I might do is go into energy. And then I can look at, are any stocks demonstrating pullbacks and uptrends and having dots? So let's look at the top 3. Sasol, I think this is an integrated, Norwegian perhaps. That's why it's an ADR, which is why it's so gappy. Um, Probably not interested in this. It's well below the 200. Weatherford showed up on scans on almost every program I have, and this is in the oil services. Now, notice it's got a higher low than here. It's going to have to take out the 50. The volume has truly come into the stock. Volume breakup momentum out of the squeeze. Down here is the high-low oscillator. When it's below 95, I won't short. When it's above 95, I won't buy. This is relative strength versus the spider and a moving average. I like to find things breaking above the moving average. And this is OBV with the moving average. Again, I want things that are breaking above. Except for the fact that this is down a lot and below the 50, this is a very compelling pattern when I look from the volume down. ENB, Enbridge, I think is an MLP, and you can notice right away it's a little bit different pattern than the other ones. And I do like Enbridge. And so here is a stock that looks to me like it's got a closing high that it hasn't seen going back. Well, I'm assuming there's one in the left, but I don't really even know that that's the case. Yeah, it hasn't seen the closing high like this going back some time. So it would be all the way back to here, which is going to be 2022. So I believe Enbridge is an MLP. Then we have GPRE, which is a refiner, which uses, I believe, ethanol. Again, just like some of the others, too far below the 50 and the 200. HCC, which is coal. And I think there was a big coal mine fire in Australia, which is causing some interest in coal. But again, it's a beaten down. And then SLB is probably the big boy with Halliburton in the services. And it had its earnings come out here. You could see a small beat, but a lot of excitement. This one clears the 200. And I'm going to ignore the high-low when you're sitting below the 200. But if this clears the 200 with this relative strength at OBV, that might be something I like. So I was able to look at a sector and look through actually 5 different industries within the sector at some of the leading stocks that are giving my dots. I could go to a larger group. I could go to my high relative strength stocks, which I download from another of locations. Why would I look at this? Because one of the things that I pointed out earlier was that the growth sectors and IBD 50 were moving. So I don't know Bit Digital. Sounds like a Bitcoin play. Big run up, pullback. Again, I would do my own research before I would even consider this stock. But look at the volume. Breakout momentum out of a squeeze. This is a PSAR reversal, not extended, and relative strength and OBV look good. It's probably interesting enough to figure out what their story is. DoorDash, I use Uber Eats myself, but big run up, sideways move, and breaking out above the 50. Not a bad looking stock. Endeavor Group, clear uptrend, pull back to the 50, and a breakout on Friday on great volume, breakout momentum. Now the relative strength hasn't caught up yet, but this is one that I thought looked interesting. Shift 4 payments, similar pattern, pull back, but notice relative strength OBV are up, not extended. Volume breakout momentum coming out of a squeeze. Those 2 momentum dots in a row are so good. I built a scan for just that one. This is my EMS. Shift 4 payments looks good. Nuke is one of those weird patterns like the Bit Digital. And frankly, I am always hesitant to trade those. Sometimes they work out. Sometimes they're story stocks, and I'm not into the meme stocks. But look at this big gap up on decent volume for it. Probably not my favorite. On, I wore their shoes today on Cloud. Look at this clear uptrend, pull back to the 50, and a big breakout on volume on Friday. That's the kind of pattern that I look for, that I trade. And what I typically will do, if I see these before they break out, is draw this line. And when that breaks above that line, I might take a trade. Well, I might take that trade. OWL is a money management, investment assets. Big run up, sideways consolidation. Looks like it might be ready to go again. Personally, the one that I like in this group and one that I own is KKR, but a very similar big run-up sideways move, and looks like it's ready to take out. PayPal, kind of a boring name to me, but let's look at the pattern. Uptrend, pullback, breakout. This is what I like to buy. So in wealth charts, just to go through some of the strengths, the indicators of my dots, the relative strength, the OBV, I believe come to everybody. In fact, if we just go here and go to add indicators, in wealth charts, you don't have to buy my stuff. You'll find that in the premier indicators, you're going to find my name somewhere. You call me, you'll see my bongo, which is my trending indicator, and my dots are standard. I have a marketplace package that includes the early signal, the high-low oscillator, a multi-time frame bongo, so I could put 3 time frames on a single daily chart, and the scanner is probably the most important part. But without the scanner, you can pretty much do everything that I've showed you with just the ones that come built in. Why do I like wealth charts? Well, I like wealth charts for a number of reasons. One of those reasons is that everything is built in. It has multiple data feeds, including futures, at a very low cost. You pay a monthly fee. You want to buy them during the Wealth 365 events, which just ended today. But I like wealth charts. It's a very full-featured program. Now, TradeStation. TradeStation has some really good things. Let me show you the really good things. One of the things that I really love in TradeStation is the scanner. And I have a number of scans that I run every day that will bring certain types of stocks that I like up to the top. And I've combined some John Person scans, some of the Q scans, and some of my own stuff to build a list each day of stocks that I want to look at and find the next leaders. Now, the problem with scanner in TradeStation is I'm a swing trader to position trader, or a investor, active investor, maybe is a better term. I can't scan until end of day. So TradeStation has this awesome tool called Radar Screen. And this is Radar Screen. And Radar Screen, I can have my indicators across the top, and it will update and give me signals as the day goes on. And it treats the current bar as closed. So I could scan the daily during the day with Radar Screen. Now the downside is you have a limit to how many instruments you can put there. It is finicky in my hands, and I have a lot of blue screens from TradeStation. But it's one of the few programs that allow you to scan treating the current bar as closed. So you can look at 3:30 and get a sense of what's going on in the markets and what the market may look like at the end of day. And if you're an end of day trader, you can front run the market and trade before the market closes. Again, the problem with treating the daily bar as closed when it's not is it can always reverse. So I have a friend, a colleague named Van, and Van created something different. And that's the trading app. Looks like a radar screen, doesn't it? But what it is a scanner. So I don't want to mess this one up yet. So let's just go back here. And let's choose symbols. And let's just pull in, let's pull the S&P 500. That's a good start. And I'm going to hit start. And what it's going to do is it's going to run through the 500 stocks in the S&P 500. And it's going to populate my dots. So if you think about what we looked at in wealth charts, price, squeeze, release, which comes out of squeeze, number of up dots or down dots, my EMS signal, my CPR signal, the green candle high, red candle low, the bongos, the relative strength versus the moving average, high, low, jump, and relative strength. So as I just said all that, I just finished running that. Now, I could then look at it. Let's just look at things that are high. Now, Intel is not my favorite stock, but interestingly, it has pulled down to resistance on the weekly and the daily and broke out a little bit this week. And you could see here all the dots. So the yellow is gap, The next green is volume, then breakout momentum, the squeeze release, the PSAR, the relative strength, and OBV look good. The point is not that Intel is a good looking stock, but that Intel might be giving us, well, it's demonstrating that I have the exact same tools on different programs. Now I want to go back to this other one here and show you how you make music here. So what I have here are 2,200 stocks, and I've run not only my signals, but for those that have the Q tools, I ran Sagar signals. So I could look at the whole list for pullbacks, breakouts, bounces, boxes, and these are actually trading models that Sagar has. But what I did, what Van did, is we built a filter. And we could open that filter, and I could search for, let's see, everything. Actually, I have to rebuild the filter because it's a new computer. But I built one here called Pull Back and Uptrend with dots and breakout. And what it's going to do is it's going to pare this down and just give me a list of stocks that meet my criteria. And I believe I could copy that and bring it, but for the meantime, let's just look at them. BKKT Holdings still got this trend line, skip it. LITE Lumentum Holdings broke out above this trend line, looks good on the weekly. Breakout momentum dot, again, took out the trend line, that's not bad. AVGO, Broadcom, got to clear the trend line. Marvell, like this one a lot. Notice how nice uptrend, pull back, took out trend line. It's got a volume, breakout, and momentum coming out of a squeeze. 70% on high jump, I can deal with that. I've got a glitch here to fix the spider. I can do it. The problem is that I got a setting wrong. So this is in here. I just have to get it working, and I do believe that just showed, it looked like it was going the right direction where the green broke out above yellow. So the relative strength looks good, OBV looks good. You can see the daily bongo just went positive, the weekly has been positive. So I like MRVL. NVST got resistance up above, not my favorite. OKTA, pullback, running higher, took out resistance. Relative strength looks okay. OBV looks okay. It's got some big resistance here on the weekly, so I'd probably pass it. Here's that 4 we looked at. And again, because of the use of Sagar's tool here, I'm able to show a breakout. So all of these stocks that I just pulled have a breakout. They have dots. And their daily bongo has turned positive in the last 9 bars, which is my setting. And they have a weekly bongo that's green. So again, another scanner tool that allows me to critically look at and find stocks that meet certain criteria. Now, what Wealth Scanner allows me to do is to search on most of the things that are not Sagar stuff to the left. And I could search for stocks that are squeezed with so many up dots, etc. But it's combining different systems. The Sagar's Q with my dot system has really enabled me, as I just showed you with one step, to find some exciting stocks. Now, the other system I was going to show you tonight is just a brief preview of my Market MRI Pro. So we're still finishing some of the cosmetics and adding some of the table stake features like a full set of indicators we got to turn on, and some of the drawing tools are almost ready. But Market MRI Pro was built by Praveen D, who has been following me for some time and basically approached me and said, hey, I can build you a scanner that will scan intraday so you don't have to wait to end the day to signals. And that is what's sitting here. This is a scanner being fed by real-time data. You can put in whatever index you want or stock list, and it's telling me real time the number of up and down dots, whether the daily bongo is green or red, and how many days it's been green or red. The weekly bongo, green or red, and how many weeks. I have three models for momentum I built: short term, intermediate term, and long term. What has the most momentum? And then is your OBV above the moving average, and for how long in days? Relative strength versus the spider, above or below, how many days? And so this is being calculated for me real time all day long. On the charts here, I have the high-low jump, which we know will go between a plus 100 and minus 100. I've got two time frames of bongo. I've got my 1750 and 200-day moving averages. I've got regular volume. And then the top bar that has green and red is my EMS signal. EMS green is a buy and the red is the sell. The next dots are my CPR. And then I get to the usual dots down here: volume, gap, volume, breakout, momentum, all of which occurred on JD on Friday. Here's the relative strength above the volume and the OBV. Exact same chart I showed you in the other platforms. Some of the strengths about this program is that we built in our timing model. So it's the same timing model charts that I showed you during my PowerPoint. And one of the things I was able to add on is a buy-sell signal line, so I don't have to go back and wonder, is this a buy or not? And that's this line that occurs in right here. We have the charts of the ETFs and the commodities. I wish I had Sagar's Q memory tool, because I find those trend lines to be incredibly useful and important. For whatever reason, two of these things aren't lighting up tonight. I have this thing, this is why it's still not out yet. Let's open it up again. Sorry about that. I've got a lot of things running here, and then sometimes Praveen is working on the back end, and the front end doesn't like that. All right. So we looked at the charts a little bit. We have this thing called daily briefing, which will update real time during the market day. I showed you that earlier, some slides that looked at high lows, where we are in the range, leading sectors, industry groups, where we are from a sector, industry, and stock performance, new high, new lows. We have our buckets looking at the NYSE, NASDAQ, Russell, and the S&P 1500. We have our own market breadth tools. Again, these are automated for you. You don't have to do any updating, and these will update typically around 9 o'clock at night. Everything else is real time. We wait for some of the data corrections before this is pushed out. You could see we actually had a eureka this week. Looks like on Wednesday. And then the ratio charts that we've come to love. Not every program is as easy as wealth charts and making ratio charts. I'll just say that. And to me, they're very useful. And then back on the stock layout, we have the ability to look at bottoms up, where we've created a number of filters, such as, let's say, volume greater than 500,000, price greater than 5, 2 days of the momentum indicator positive, hit OK. And these are some of the stocks that I like. So I can show you a couple of them. John Deere had a beautiful breakout this week. Pullback, took out the 50 here, stumbled a bit, went higher, and you could see we've got gap, volume, and momentum. Relative strength and OBV look good and not extended. The cruise ships look great. Here's Norwegian Cruise, pullback, sitting on the 50. I think RCL looks even better. Let me just show you RCL. Sitting right on the 50 with multiple dots. On, we talked about it when we were looking at wealth charts. Uptrend, pullback to the 50 and a breakout. So a lot of the stocks I look at will end up, and there's that energy again, or Integris. Maybe it's not. Oh, this is different than the energy one. This is a technology play. Nothing real attractive there. It just made it here because of the two momentum signals. But this is a great place for me to find upcoming leaders. ResMed's got a break above the 50, which it did on Friday. That's when I'll be watching as well. Now, something else I can do, and we'll continue to add these filters because I could be doing these scans during the day as well. As if I want to look from a top down, I took those 3,500 stocks and each one, those are, and I should actually go back for a second. The JAS list equals the NYSE plus the NASDAQ and filtered for $100,000 shares and $1. And you can see we have 3,533 stocks. What you can also see is that when I go to top down, I've got the 11 sectors and each stock is in a sector and the industry groups. So to me, the essence of top-down investing and what we're going to talk about next Saturday for 3 hours, again, it will not be a 3-hour sales presentation, I promise you. If we look at percent move on Friday, technology surprisingly was number one. It is also the highest on the short-term momentum. Here are the 561 stocks that make it into the technology sector. Now I'm going to ask Praveen to build in the same filters here, but one thing that I'm able to do is let's rank them by, let me do a couple things. Let me go to hot list and let me just, I want to kill it, but I thought, let's see, yep, we'll delete kill it. Here we go. Let's go back into top down and let's rank these by short-term momentum. And let's just highlight that one and highlight this one. And then I can add these. It may not be turned back on. I should be able to right-click these, and I will be on the next upload because we looked at it last night, and add those to the hot list. But here's that NUKK, technology play. This is just a pattern when it's been dead. It went all the way up to almost 80, and now it's back down to 13 before it moves again. It sounds like a meme stock. But MPWR, still too beaten up for me. MicroStrategy, I do like this one. This is a Bitcoin aggregator and leverage play. Big run up, pull back to the 50 and going again. And notice two positive dots. Relative strength and OBV look good. KLAC is a semiconductor stock. And I could go through, I'm going to put 1 year's worth of data here. Cuervo, Duolingo, Coin was one that looked really good this weekend. So I could go top down. Let's say I don't want to look at all technology. I want to look at just the top 3 industry groups. So I could rank this and bring up, these are the top industry groups. And I got a feeling this healthcare doesn't have a lot in it. So let's click off 1, 2, 3, 4, 5. So these 104 stocks represent the stocks in the top 5 industry groups. When we move those to the hot list, and we're waiting for Praveen to activate that, you'll be able to run my filters on it. But we could certainly, again, rank them, or I guess they're already ranked by short term. There's Empower, Clack, Cuervo. Again, I don't like buying things that have been sold off like this, so I usually ignore them, which is not always good. It doesn't look good. ASML. Again, this is a great semiconductor company, but it's sold off hard, working its way up. Dillard's, retail. Who would have thought? Kind of in a triple top, quadruple top. Applied Materials. So I could go down this list. There's Marvell. We looked at it before. A-Lab is a young AI company. It's given a nice little pullback here. That one looks interesting to me as well. CCJ, a uranium company, has pulled back to the 200. Again, I'd rather buy things above the 50 and above the 200, but that might be an interesting entry point. So what I just wanted to show you is I have the ability of identifying stocks in the leading sector or industry group. I think this is as clean an adaptation out there except for maybe HGSI, with the advantage that this is a true real-time program. Still love HGSI if you're wondering. I still use it all the time. So let me just finish this by looking at some of my favorite stocks, some of which we've already talked about. So we talked first about RCL. Let's just go back and review it. Why did I like it? Major uptrend, pull back to the 50, which I call free parking. You notice free parking was great support here before. And we have two dots down here, a momentum and a breakout, and the EMS went positive. We looked at Norwegian. Let's look at CCL. And when I see 3 in the exact same group going up, it tells me something's good here. Similar pattern on CCL. We already looked at well, we'll just put it up here one more time, just in case we forgot or I forgot to show you. NCLH, Norwegian Cruise, pull back an uptrend to the 50. All right. I mentioned KKR, and I think we looked at it in wealth charts compared to the one that came up as a potential investment stock advisor. What a beautiful uptrend pullback to the 50 and breaking out. We looked at Shift 4 payments. Semi4 changed its ticker. And we could see an uptrend pull back to the 50, not as smooth as the others, but breaking out here with a bunch of dots. Food Tube. I think this is some kind of a brokerage stock. And let me show you something really cool that I keep forgetting to show people. So here's that pattern of the run up, pull back, and it looks like it wants to run again. Notice we had volume, breakout momentum, relative strength turned up, and OBV is turning up. We could go up here, and I should have showed you this before. If I click on that, you're going to see earnings, change earnings and surprise going back. Same thing with revenue. You're going to see market cap, beta, float, price to sales, gross margins, debt to equity, does it pay a dividend, what the PE is, and so on and so forth. So fundamentally, not such a great looking stock. I like the chart. We looked at Marvell. We'll look at it again in this program. For those that have watched me build this program with Praveen, you can see the speed improvements that he's made. This one's breaking out to a recent high, MRVL. One of my favorite tools is when I go to a restaurant and they don't have to take away my credit card anymore. And often they're using a box from Toast. Big uptrend, pull back to the 50. I'd like to see this clear the 50 with some dots before I get too excited, but that's on a watch list. Another stock that I own, I think this is like a Singapore Amazon. I should tell you, I should know what everything I have does. It's just not the way the world works. I am not a fundamental trader. I do look at news and I have a sense, but SE, here we go, C Limited. Look at this uptrend. Pull back to the 50, free parking and getting ready to go again. Talked about that a few weeks ago. We looked at on already here, and then I'm just going to finish with 2. One of them I don't know anything about, QFin, Qifu Technology. Big uptrend, pull back to the 50, looks like it wants to go again. And lastly, CCJ, which I think we already looked at as a uranium play that's sitting on the 200. So I think the message is I have a specific way of trading. I want pullbacks and uptrends with momentum. That's what I trade all day long. Next Saturday, we'll talk about whether I use stock options, stock equivalents with options, and how I manage them. And we'll use all these different tools because you have your own tools. You may want my tools. I don't care. I want you to trade and be successful. I'm going to show you what I've learned, how I use the tools, and I hope you enjoy it. Thanks for putting up with this longer than normal video. I just wanted to go into a little bit more detail because of that upcoming education program. And just to remind you, just go to tinyurl.topdowntrader and I'll put this in the remarks, and I hope to see you all next Saturday. Seats are limited. They're just not expensive because they're free.